My name is Kyle Samani. I'm a co-founder and managing partner at Multicoin Capital. Today, I'm going to talk about why we think Sol is going to flip ETH in market cap. Some of you may already believe this. Some of you may think that's heretical, or you think it's not going to happen. My goal here is to help you at least reconsider your priors. This presentation is going to have three parts. First, I'm going to talk a little bit about the history of Ethereum, because I think that provides important context for understanding the state of Ethereum today and a lot of its problems. Then I'm going to talk about why Solana is positioned to succeed, and then we'll wrap up by looking at some of the key metrics in which Solana is either already passed or is close to passing Ethereum that are really key on-chain metrics that we look at Multicoin. Before we get started, I do have a couple of quick legal disclosures. First, my commentary today are my own personal views and not those of Multicoin. And second legal disclosure is that nothing in this presentation should be investment advice or should be construed as an offer of Multicoin's investment advisory services. All right, so let's start off with the history of Ethereum. Ethereum is 9 years old. Mainnet launched in July of 2015. I think that's really important to emphasize, and I'm going to emphasize it a lot through this presentation. This thing's been around for 9 years. They've had a lot of time to figure out how to deal with their problems and even figure out what they want to be. And I'll touch on these themes. So it's been 9 years. What's happened in that time? I think there's been kind of three major things that have happened. First is the emergence of DeFi as the most important use case of asset ledgers and of blockchains. Obviously, there was a lot that happened prior to 2020, but like DeFi summer happened, and I'll kind of call that like the birth of modern DeFi. So that took 5 years after Ethereum launched to have that happen. Second really important thing that happened was the commitment to the roll-up-centric roadmap. And that decision was made in October of 2020, just a few months after DeFi summer. I think that's also really important to note because the roll-up-centric roadmap, one of the most obvious shortcomings of it is that it is just bad for DeFi. It's created all these fragmentation issues, bridging issues, all this other stuff. And DeFi summer happened, and then 2 months later, they're like, roll-up roadmap, which is going to be bad for DeFi. And then I think the third major transition has been, of course, the transition from proof of work to proof of stake, which was in 2022, and that was 7 years after mainnet launched. Again, I highlight the 7 years because they knew they wanted to make the switch before mainnet launched in 2015. So they knew they wanted to do it, and it took 7 years to actually do the thing that they said they wanted to do. This community has been slow. They've never known what they wanted to do, and that's kind of the point I'm trying to emphasize here. Next, we're at, here we go. I want to talk briefly about the scaling roadmap. Quite frankly, the roadmap has changed more times than we can count. In the early days of Ethereum, there was a whole bunch of talk of sharding, plasma, state channels. If you really go back far enough, you'll remember hypercube routing, a bunch of other crazy ideas. All of these things obviously haven't panned out. It took them 5 years, and they committed to this roll-up-centric roadmap thing in October of 2020. Today, now, that roadmap even seems to be in question, or at least partially in question. If you've been following along in kind of the public discourse, there's been a lot of talk about, hey, should we scale the L1? Should we do multiple concurrent block proposers? A lot of these other things that have been kind of more Solana or near-centric in their approaches are now being reintroduced to the Ethereum discussion. We have no idea what decisions the EF is going to make on these front. It may take them 3 more months, it may take them 6, may take them 9 more months, who knows. But my point to you is that the roadmap that was committed to 4 years ago today is at least partially in question and perhaps entirely in question. And so it's just like, okay, you've been around for 9 years, you're back to the drawing board, like, what's going on? Last thing I want to say about Ethereum before getting to Solana is that ETH is not accruing value. The transition to this roll-up-centric roadmap has very explicitly surrendered fees, both transaction fees and MEV fees, that used to go to the L1, and now they're going to L2s, L3s, L4s, whatever they are. The intent of this roll-up-centric roadmap was, of course, to push transactions from L1 to L2, and they've done that. But in doing so, they also just moved all of the actual value accretion to ETH, the asset, away from the L1. The ETH people will tell you, well, oh, you can still use ETH for DA, and that's true. But as I'm going to show in the next few slides, DA rounds to 0. There's plenty of DA to go around in Ethereum and elsewhere. And of course, the last thing you'll hear people say about value accrual for ETH is that ETH is money. And this is nonsense. This is a circular statement and is non-falsifiable. Therefore, like they're just subjecting you to their religion. You can't reason about this at all. The litmus test for is something money is go to the coffee shop and ask them, hey, how do you price the coffee? If they say ETH, then ETH is money. If they say dollars, then dollars is money. Like that's the litmus test for money. There is no other litmus test. And so if we look at the data of this whole L2 thing, here we're looking at the percentage of transactions that have moved from L1 to L2 over the last 3-4 years. And it's obviously very clear. Basically everything is on L2 at this point. 90% plus is on L2. This is by design, which is great. They accomplish their objective. But to what end? They talk about this DA value accrual. Here we're looking at, you talk about DA value accrual. Well, in fact, the L2s are the ones making all the money. This is the revenue and expenses for Base, which is the largest L2 by most major metrics. And you can see here very clearly, Base is making a lot of money. This is like on the order of $1 million a week, plus or minus. And their expenses are effectively zero. And expenses here is ETH paid for DA to the L1. As of March, they went to zero, and it's probably going to stay at zero. The other thing I really want to highlight here is that this whole talk of alignment. People have been saying, oh, L2s are aligned with L1s. But actually, this chart really emphasizes the fact that they are actually anti-aligned. Base is owned by Coinbase, and the point of Base is to produce profits for Coinbase's shareholders. And so they want to maximize revenues and minimize expenses. And so, in fact, the incentives of Base are the exact opposites of the incentives of ETH L1, because Base wants to minimize the cost it pays. If we look at some of the other major L2s, like Optimism, you see the chart looks more or less the same. I don't want to highlight just Base. Optimism looks more or less the same. And Arbitrum, again, more or less is the same. So you can see this pattern consistently across all of the L2s. I'm going to say the quiet part out loud. Ethereum has never really known what it wants to be. It launched as a world computer 9 years ago, and that was never defined, still isn't defined. And to be clear, I don't think they have to define world computer, like whatever, it's fine, it's a marketing term. But it's been 9 years, so like tell us what this thing is useful for. Obviously there's been DeFi, there's been NFTs, there's been Web3, there's been decentralized identity, storage, Whisper, whatever, all these things that it could have evolved into. But right now it's kind of a mishmash of all of the above, and is quite frankly therefore nothing, because nothing actually stands out. Even as recently as a few weeks ago, Vitalik and others from the EF were publicly basically saying DeFi is just circular nonsense, like do other stuff with Ethereum. And like, great, I would love it for Ethereum to do more too, but like, hey, it's been 9 years, like, provide some guidance, like where do you think we should go? Have some opinions. And it's just like the lack of urgency of wanting to figure out what it's useful for and pushing the ecosystem in that direction has created a tremendous amount of really bad inertia in the system as a whole. DeFi is the most important thing that happens on blockchains today. You see this on Ethereum, you see it on Solana, you see it on Aptos, you see it everywhere you look. And the Ethereum people are telling you, DeFi, whatever. Okay, well, if you're not going to optimize for DeFi, that's fine. Then tell us what you're going to optimize for. And they fail to do that because they don't know. So let's recap Ethereum. This thing is 9 years old. It took 5 years to commit to a scaling plan, and then it took 7 years to commit to actually do the proof of work to proof of stake transition. This thing has never really known what it wants to be. Scaling plan continues to change. There's no North Star. They don't know what they're optimizing for. And because of this roll-up roadmap, they've effectively taken all of the value accretion out of the ETH, the asset, and sent it off to the L2s like Base and others. Meanwhile, ETH still trades at like 300 billion. This is one of the largest assets in the world, probably number 40 asset roughly by market cap in the world. And this thing doesn't know what it wants to be. This asset is just structurally broken. All right, now we're going to turn to Solana. It's important. We started with the history of Ethereum, so now we're going to get into the history of Solana. Whereas Ethereum has never really known what it wants to be, Solana has always been very focused. Anatoly founded Solana started thinking about Solana in 2017 because he was writing trading bots using a service in the US called Interactive Brokers. Interactive Brokers is like Robinhood kind of a thing, but a little more advanced. You can do some more powerful trades. He was writing trading bots, and he realized that he could not get real-time market data of what was trading on the New York Stock Exchange or on the NASDAQ to write his trading bots. And obviously, it's well known that Virtu, Jump, Citadel, Jane Street, all these guys have access to real-time data from the major stock exchanges. And he found that to be fundamentally unfair and unjust. He's like, wait a minute, it's a market, I should be able to trade just like them. And he is physically unable to even get the information to be able to trade. And so this was the core insight that led to the development of Solana, that anyone in the world should be able to have fair and open and permissionless access to market data 24 hours a day, 7 days a week. The system, of course, then needs to be optimized to propagate this information to anyone who has a computer and internet who can obviously receive that market data in real time. This, of course, kind of turned into the vision that we've now been talking about for 6 years, which is building this decentralized NASDAQ kind of a concept. And this has been the North Star that has guided Solana from day one to build this global real-time exchange that anyone can access. It's been a lot more difficult to build this exchange than any of us thought it was going to take. Anatoly, myself, and many others included. They started working on it in 2018 and launched 1.0 in 2020. You know, Solana's had a lot of public failures. Network's gone down, I don't know, 10 times since inception. There's been congestion issues. All kinds of weird stuff has happened. But the reason I highlight all of this is that I want to emphasize, even once you pick a North Star, a vision, and you say, okay, we're going to go commit to this vision, it then takes a lot of time to actually get there. I think Solana really only since like May of this year has been able to kind of credibly say it fulfills the vision that it set out for. Because only after the 118 upgrade in May did Solana actually, the limit orders and cancels worked on chain, transactions go through, meme coins were firing, ore mining, I mean, everything was working, Oracle updates were working, and the fees were effectively zero, and you know, it's like, right, and it took years of battle testing the system to get there. And of course, the beauty of this model is that they committed to this really difficult and ambitious vision, and it took a lot of time to get there, and they failed a lot on the way. And, but the beauty of that now is that the user experience is amazing. No bridging, no liquidity fragmentation, none of that stuff. And you also get to accrue value to Sol, the asset. Sol today, depending on the day you look at, is earning between 500 million and $1 billion of revenue annualized, and that's all coming from MEV. And so this is really the beauty of Solana, is that it took, you know, we had this focus and we executed on it for 6 years. And this is really why we believe Sol is going to flip ETH in market cap. Now, on the next few slides, I'm going to dig into some of the metrics, on-chain metrics that we think are really the critical ones we look at to kind of judge, hey, is the thesis playing out here? First, of course, blockchains are financial systems. I've been talking about trading for the last few minutes. And on-chain trading is, in our view, the most important metric for a blockchain. Over the last year, we've seen Solana dexes basically come to rival Ethereum dexes. Some weeks, I believe every data point here is weekly. So some weeks we're seeing Solana is higher than Ethereum, other weeks it's less than Ethereum. But it's today effectively on par with Ethereum in terms of daily trading volumes on chain. We think this is the most important thing to look at because that's the whole point of NASDAQ, is to trade. Next, I want to look at actual direct value accrual to Sol, the asset, versus direct value accrual to ETH, the asset. And as of today, Solana, again, is effectively caught up to or is rivaling ETH on this metric. This is looking at the total validator tips paid to ETH stakers and Sol stakers in these respective systems. Some weeks Solana is higher, some weeks ETH's higher, but again, these metrics are more or less neck and neck right now. And then the third metric I want to look at is stablecoin transfers. Here, Solana is still well behind Ethereum, but I want to look at the relative ratios here. About a year ago, Solana was at roughly 1/10 or 1/20th of daily on-chain stablecoin transfers relative to Ethereum. Today, it's roughly half. So it's caught up by a ratio of roughly 5 to 10x, depending on exactly how you want to measure it. And again, we think this is key to show that, hey, money is moving around on-chain. And of course, if you then look at the last 3 charts and look at the shape of those, it's actually no surprise to see the shape of the Sol ETH chart looks more or less the same. And so if you believe that the metrics on the prior 3 charts are going to continue in the same direction, then it's pretty reasonable to conclude that the ratio of this chart is also going to continue in the same direction. All right, now I want to talk a little bit about the future for Solana and why we think it has a couple of, really 3 unique advantages that we think are going to be basically impossible for the Ethereum community to recreate, and why we're even more excited about this thing going forward. The first is token extensions. Token extensions went live earlier this year on mainnet. Token extensions provide a lot of features that Wall Street companies want, or that payments companies want, or any major asset issue around the world. Those include features like interest-bearing tokens, so like if you want to have stable coins on chain with it earn yield. If you want to be able to have confidential transfers so you can hide, sender, and receiver. if you want to do ability to issue and revoke assets, and a whole bunch of other features that in this kind of bucket of ideas. And all of these features were developed based on direct input from payments companies and Wall Streets over the last few years. And all of this is live on mainnet today. It's 100% free, 100% open. All the documentation is open and available. And I highlight this because I think that we have meme coins, we have DeFi assets, we have DePIN assets, we have all of these things that are crypto native, obviously. Us and most of y'all probably are following a lot of that stuff. But then there's this whole other world of finance, which is regulated finance. And regulated finance is only ever going to come on-chain at scale if they have all of these collection of features. And all of this stuff is just built into Solana L1 natively, and it's ready to go. We think this is super important, and we think it's going to be basically impossible to recreate this in the Ethereum ecosystem because the EVM itself is fragmented. What do I mean by that? Well, there's a lot of different flavors of the EVM out there. There's the different optimistic flavors, there's the different ZK flavors, there's the Polygon sidechain flavors, there's the JP Morgan internal blockchain flavor, and all of these versions of the EVM are not the same. They're like 98% the same, but they're not 100% the same. And so if you're going to try and create a common set of standards to have interest-bearing stablecoins, to have confidentiality work through bridges across these systems, it's going to be really, really hard to make all of those pieces talk and connect to each other. Again, it is possible. Like, there's no physics limitation or software limitation. It's a people problem. You have to get all of these different groups of people to sit down and agree. And that's going to be very, very difficult to do. The first major token using token extensions is live now. It's called PYUSD. It's PayPal stablecoin. It went live a few months ago on mainnet. And so we're really looking forward to seeing token extensions roll out. It's been a little slow. You probably heard about it and kind of forgot about it. But I would say keep your eyes on token extensions. I think in 3 or 4 years' time, it's going to be like one of the defining things that makes Solana really stand out. Next, I want to talk about Firedancer. Firedancer is a new Solana client expected to go live in the next few days or next few weeks. I think they're announcing the dates tomorrow at Breakpoint. For those of you who are unfamiliar, Firedancer is a new Solana client being built by Jump Trading. Jump Trading is one of the largest HFT firms in the world. And of HFT firms, Jump is actually known for being the fastest. And we think this is really important because the Jump team is taking all of their accumulated knowledge and wisdom from building high-performance trading systems, and they're building all of that into the Solana code base. This system, again, from day one, the vision was decentralized NASDAQ, and we're now taking one of the preeminent trading firms and applying all of that wisdom to making the world's fastest permissionless exchange. This thing is going to scale, it's going to be fast, and it's going to allow everything that we like about Solana, the composability, the no bridging, all these things will just magically work even better under Firedancer. And of course, the last thing I want to talk about then, and this kind of builds on Firedancer, is scaling with hardware. One of the foundational design principles of Solana is the focus on scaling organically with parallel hardware. Anatoly's been talking about this since day one. I've been talking about this for years. And the idea is very simple. Is if you double or triple the number of cores in the system, you would hope that the performance would double or triple of the system. Very straightforward idea. This is obviously generically a good idea because of Moore's law over the last 50 years. As core counts have grown, especially over the last 10 or 15 years, systems that can take advantage of that have gotten better in terms of performance. But this is actually particularly important today because of the renaissance happening in AI. There's now more capital going into the entire silicon value chain from design through manufacturing, and that's growing at the highest rate in both percent terms and absolute terms in the last 30 years. And this is all because of this AI renaissance. And all of these AI chips that are being built by all of these different startups, NVIDIA, AMD, everyone, all of these chips are massively, massively parallel chips. Not all of them will work for Solana, but it doesn't matter. You only need a couple of them to be applicable. And those are going to help drive the performance of Solana even further. What's so amazing about this AI renaissance is that it has absolutely nothing to do with crypto. No one in the Solana ecosystem has to know or care about any of the stuff going on in AI land. And you just have like an incremental 30, 40, 50 billion dollars of R&D happening across all these various companies. And all of that labor and energy is going to produce a better Solana network. And like, those are the kinds of really foundational bets that you have to make at the core of the design of the system in order to win what is going to be one of the largest markets in the world, which we think is decentralized NASDAQ. The EVM is a single-threaded processor. they've been talking about parallelizing it for 9 years, done absolutely nothing. And like we think this kind of full embrace of parallelism is going to, again, really become more evident over the coming years as we scale the assets on chain. To wrap things up, we really could not be more excited about the future of Solana. The community has coalesced around a common vision, and everyone's rowing in the same direction. Everyone's working towards this decentralized NASDAQ. We have the teams building, we have the asset issuers, we have the token extensions, we have the new performant clients. All of this works together cohesively to produce a network that scales and to produce an asset that can accrue value as it scales. We're really looking forward to seeing Sol flip ETH in the coming years ahead. Thank you.